Foreign investments in Nigeria's equities rose to 204% quarter-on-quarter to $150 million in the second quarter of this year. Muktar Mohammed, analyst at Assar Investments, joins me now on the performance of the stock market so far and likely impact of the new petrol price shocks across sectors. Muktar, thank you so much. Pleasure to have you.
Thank you.
Well, it's good to see that we're seeing, foreign investments at the market up 204%. We've talked a long time about, the domestic investors being the main drivers of the market, which obviously is a good thing compared to what we've seen in the past. But just share your thoughts on that.
Well, it's a good thing that we're having the foreign investor come in, but in terms, $150 million. And when you look at that, we are looking in terms of the amount that they are bringing in. And we're looking at the current exchange rate, and it looks very nice. But if you compare it by where we were when they came in previously, then you realize that they have not really come in that much like that. So it's just like what we see in terms of capital importation. You see, though it has gone. It's fair, but you are not looking at the exchange rate and why it looked healthy. It looked healthy in terms of value, right. But in terms of volume, or in terms of the number of foreign investors that you have, we see a far cry from what we used to have. But all the same, I think it's good for the market, and they're coming in at the right time. They're trying to see how deep in the market will be. And then again, I think they're coming in at a time whereby it's create more value for them, right. Especially when you look at the exchange rate by the Naira, and what internationally have been saying that the Naira is definitely very, very undervalued at the moment in terms of the price difference between the Naira and the dollar. Right. So it's a good incentive for them to come in. And then again, Nigerian equity market has been one of the tools of investors all through last year and even going into earlier this year.
So for foreign investors, I've always wondered, typically what kind of counters would they typically go for?
Most of them go for the multinationals, but unfortunately, because of the FS crisis, now some of these multinationals in the consumer goods sector, brewery sectors are not really where they want to go to at this moment. So they also tend themselves in the banking sector, in the financial sector, especially the Fuga banks. That's where they normally stay, most tier one bank especially. Right.
And speaking about FX, we know that one of the reasons why they left the market was because of the difficulty in repatriating their funds. Is that still a concern?
It's still a big concern. Remember that we've still not been listed in the
MSCI, the frontier market.
Frontier market. We've still not been listed there, so that shows that there's a challenge. So those that are coming in here are only coming in based on the risks. They have apathy for the risks. They think that, okay, we can take the risk. But what really drives foreign investors and sustain foreign investors in your market is they listed in the other frontier market. We're still not there. So that tells you that there's still that challenge of the two-way exchange system, because that was the only reason why we're out of that space. So we've not improved on that. So I, for one, am not celebrating it yet until I see us listed in that frontier market where every foreign investor is looking to come to Africa. Most of the well-known foreign investors will go to the frontier market, look at what has happened in your equity market, look at the stocks that are listed there, and then most especially look at the two-way exchange system.
So it gives them some kind of a benchmark, outlook for what's happening at the market, right? So far, what are your trading highlights so far this week?
I think volumes? The trading highlight this week should be Fidelity surprising investors over the weekend with that 85 Naira dividend payout, and that was huge. And the response has been positive, but not as positive as most investors thought. But yesterday was really on a high beat. But today, I think it seems to be, even if it's moving a little bit, but not most investors thought that today we should be seeing it hitting between 16, 18, and still not available. But it's available, and that is profit taking. I think for me, that is a key headline of the market. Right. After we got that also good one from UBA, and we saw that movement after 1 to 2 days, and we realized that it has stayed at 27 Naira about. And so hopefully, I think we will see Fidelity staying at 15 Naira, between 15 Naira, 15 Naira, 50 kobo. So for me, that's the major highlight. Outside of that, I don't think there's any trigger that has really through the market now.
Well, the market is still trying to digest news. In some way, inflation, the consumer goods are still struggling.
And then you're not forgetting that we still have some bankers not come for the right issues. Right. We've not gotten the result of the last offer and right issue from most of these financial institutions. Nigerian brewery right issues should come to an end today. So those also are what is driving funds from most investors into that space. So we'll see how that plan out after they are listed, and then we'll begin to know what the true value of some of these equity is. And mustn't forget that, again, the third quarter result will be coming in any moment from now. That could also be a key driver. A key driver.
And I was going to mention, I mean, the issue of, for the consumer guys, we know that FX pressure, not just the FX pressure, there's also the consumer pocket and, shrinking consumer spending. You and I were talking earlier about the price increase in petrol that, just came out today from the NNPC, 998 now for Lagos. I know that this is also something the market will also digest on some level.
Yeah,
because it impacts, the consumer, because at the end of the day, the purchasing power of the consumer has further been eroded.
It's Nigeria rolled through a petrol economy. Our major means of transportation is being driven by PMS. So definitely any issue that has to do with PMS tend to affect everybody. Now we see the diesel price have stabilized. So before now you see that, okay, the price of diesel has gone up, is affecting the consumer space. But you talked about the FX challenge, and then now the consumer themselves, earning ability of the average consumer is still very, very low, especially with the high cost of living that's happening. So definitely, if you look at that now, you expect that the market will react negatively to the consumer goods space, and also will react negatively also to the petroleum stake, because ordinarily it should be a positive trigger to the react positively in the petroleum sector,
for the downstream guys,
that are listed, because that means more funds for them, more money for them, that could have impact on their bottom line.
But it's inelastic. If you think about it, we have to move.
Yeah, we have to move about. So definitely that should be the space that deciding investors will say you need to invest in that space. And they remember that Seplat is in that space one of the most most expensive stocks in the Nigerian equity market now. And Owando also is finally doing very well, and we had the news that they might be also getting to purchase a refinery in
Trinidad and Tobago.
So all those we filter in with this should be a positive impact in the petroleum sector. Then you come to the financial sector. How will this impact the financial sector? We saw those results from this half-year result. You could see that one key negativity in that result is the imperial charges that have really gone up, non-performing loans.
I know that banks are allotting more cash to that to protect themselves.
To protect themselves. So you see that also is going to affect that space, because now with this high cost, that means a lot of businesses will not be able to meet up with their loan obligation. Service, so it's something that's going to have impact. So, but we'll see how
domino effect,
the domino effect. We'll see how that will plan out in the market. But again, it's not good news for the consumer goods sector. And it might not be good news for the financial sector.
And I know that, we also talk, have conversations, on the monetary side of things also. We just had our MPC meeting a few weeks ago, and we know that the position is still to tighten, because I suppose they want to
see. It's like they were aware that we could come up with price. Remember the CBN governor said something that they are worried about the removal of subsidy. So nobody read it that it will be come at this way, because a lot of us were saying that if you remove subsidy and you have that means you should be earning more effects into your economy. But we didn't know that he was trying to look at it what will happen to the purchasing power of Nigeria when subsidy is removed. That means they knew that the true cost of PMS was not what we were really paying for. They were going to pay higher than that if subsidy was removed.
But that's the question, is this subsidy, has it been completely 100% removed? That is still something
yes,
we're having
I wish I could say categorically, because again, I'll go back to the president's speech. The president's speech was, by 1st of October, Dangote will be able to buy crude in Naira, and at a fixed exchange rate. That fixed exchange rate is what we have not been told. What is that fixed exchange rate?
Well, we're supposed to take our cue from the official market.
That's what I'm saying. If it was going to come from the official market, we won't be talking about fixed.
Right, because it moves from
that will be willing buyer, willing seller. We're talking about, they said, a fixed. It said it categorically, it will be fixed. It will not be up and down. Remember again, he came up with the policy of removal of tariff on household goods and household consumables. That also has not happened 3 months after. So all this could be why the CBN is saying we have to tighten because there's still a lot of pressure on the economy.
Well, that's quite interesting. But talk to us about, I mean, at a time like this, where would investors be taking shelter in the market outside of the outside of the banking? Because
Esther, if I'm an investor, why will I go outside? I will still want to be in the banking store because they're going to pay me dividends. And at this point, when the economy is going through stages like this, it's tightening, and then again, liquidity is key. So a lot of investors will go for liquid stocks, and those liquid stocks will be stocks that are going to pay good dividends. Right.
And one final point, we have just 60 seconds left. Still back to the consumer goods guys. Would they be able to, at this point, pass on an increase in costs to the consumer? Because at some point, the consumer will push back.
What do you expect?
Would demand collapse?
Demand will reduce, but price will go up. And then we'll see the same thing like we're just talking about, what we're just talking, turnover will be low. But in terms of, maybe in terms of profit might go up, but turnover will be low. Then the one that nobody is looking at is that means they will be looking at reducing costs. And when they want to look at reducing costs, the first place you try to look at when you reduce costs, you want to reduce your work strength. And that means we might get this unemployment figure go up.
Right. All right. Thank you so much. I mean, gloomy times, but thank you so much for talking to us today. Muktar Mohammed, analyst at Assar Investments.